Good morning, everybody. Got some charts up. Okay. Well, markets have bounced from Friday's little drop. I got the S&Ps and SPX over here, trying to knock out two things on one chart here. So the bounce up has hit its head on the 50 MA, and as always, we look to the left to see if there's anything lined up with that. And it's at this little area right there that it had dropped from. So price resistance. Um, the real resistance is way up here. This is where the move started. That was just a resting point before the next drop. Sort of what we call a measured move, where prices make an initial momentum drop. They begin to stabilize, and sometimes it's lined up with some support. Looks like there was nothing there. Anyway, maybe it was the 50. Actually, yeah, it should have been, right? It should have been at the 50 on Friday. And then it just continued lower. And it's about an equal move, as you can see. So now the depth of retracement here, decent start, but go to the bigger time frame. It's still in the lower half of the wide range bar. And the S&Ps aren't, SPY is not going to look like this, which we'll get to. But since this is a 24-hour chart, we see the big down move and the retracement up. And so what we look for is, when we look at this chart, as always with a wide range bar, is does it stay in the lower half, the opens and closes? So even if it retraces a bit further, at the end of the day, is it still in the bottom half? And I suspect that today will be kind of a feel it out, see which way things might go. Can we rally into the void above? We test the lows, and you know, in a way of saying, was last week real? Right? And it was, of course, very real, because we saw the decline across many different sectors, all pointing toward an economic, I don't know how much slowdown versus maybe more so, hey, maybe we thought it was going to be too much. Expectations were too big, and maybe they're coming back into reality, and eventually the Fed gonna taper and all of that, which is never initially made the market go into a bear market. It's taken more time to do that. So as I said, we'll see where this thing goes, how far it can retrace it into that bar. So SPX levels, you can actually go, well, I haven't looked in the last few minutes, but 42.20. And if you're a little more aggressive, I think even 42.15 is doable. It is into the void, so that's a concern. This is the safer one, of course, but there's some decent premium there. And can it get through 4,200? And if it does, it begins to open up the door to going up here. So, see how things you're for 42.20. Yeah, that's what McGraw is saying. That's the safer bet for sure. It is the gap fill, and if it gets there, there's going to be plenty of sellers up there. Especially if it was to rally up there, like if it came out of the blocks and went straight up there. And if it did do that, you could probably go up to 25, because the premiums would pop. So you've got this resistance, you've got a pretty stiff level there. And then there's this void. Whether it can get into that, of course, is the question. Now, down below, and because of the drop, the premiums are pretty big, but you can go way down here to 4,100, 40.95. Let me just look again. Yeah, they're kind of, I guess is jiggling around there, not as much as they were, but you can go pretty low. And the fact that this is already up here and so far away, I think it's unlikely you're going to get anywhere near way down there today. All right. I want to look at SPY. And so right now they're trading around 417 or so. And that's a pretty nice gap from a red bar. And it's got a void above. And as we looked at the futures, they're up against this resistance there, same area, from so there was the initial drop early that we don't have on this because it was the gap down, but we see the big red bar on the futures. So if it can get through here, it opens up the door to coming up into that gap fill. It would be surprising to see how far it could get. And there's nothing in between here and here. So it's kind of, it's hard to say, can it do it logically? Would a drop like that? I would think not. If the selling was as severe as it was, I don't think longs that were long would be willing to wait for it to get into the gap fill. But again, we'll see how it plays out. Just a gap up to the top of the red bar is a pretty good start. And it's just, churning back and forth there, but you could see the void as how it came down on Friday. Is really, you've got this downside shakeout type of a pattern when we look at the 24-hour. And if it can clear here, it really does open up the door to, a rally, but we'll see how far it can get. If it comes out of the blocks at the open and spikes up here and gets slammed back down, well, that should tell you what's going to happen after that. Because they're not waiting very long for it to get higher. So we'll see. All right. Now, Qs. It's interesting when we look at the futures here. So they had the great day on Thursday, and then Friday basically was a resting day. No big deal. However, it's reached what we call the destination. It bottomed here, made an initial move, reversal. And so now, as long as if it goes sideways around here, doesn't break down under Thursday's low and close under Thursday's low, well, this maintains a bullish chart. And it's at 430, 343. Basically neutral, doing nothing here. So we'll keep an eye on this to see, can it maintain this level or does it start to come back in again? What if it breaks out at the open, then drops? Well, that's not going to be good, Deb. That just means sellers are aggressive, but it would be more of a normal kind of a pattern because, you had an initial move. So after an initial move off of the low, and then you get a reversal type of a pattern like this, and it breaks out, even if it came back in, we'd give it the benefit of the doubt that it could go higher. But after this is made one move, a second move, the other markets in question, so many other markets in question. However, as we go through and look at, whether it's the Dow, material sector, all of the ones that we covered over the weekend, they're a bit extended to the downside. So it's that catch-up kind of a trade thing. What was then beaten down can outperform, and what outperformed, as long as it doesn't break down, it's doing okay. But just from a point of view of money looking for what's cheap, it's going to go to what's beaten down. Whereas this is already outperformed. And as long as, as I said, it can hold up in this area and not break down, it's great. Now, if we see that what has been beaten down doesn't get very far today and eventually breaks, and odds are this is going to get dragged down, and then we got everything moving from a bearish level. And it would make sense for this to come down if the other markets are coming down. So as I started the commentary, I think today is going to be a testing day, so to speak, as to how much can we bounce or not. And we'll see how things unfold. Looking at the weekly chart, this is a slowing momentum candle. Last week's low is critical. If we were to get, again, I don't want to go out too far, but into the end of the week, if we got a red bar that's closing under that low, we all know what that means. All right. IWM, this came down a lot. Now it's bouncing back up. It's near some support here. And with the idea of what went down more, bouncing more during bounce time, I think that's the place to look versus then, the Qs or tech. That's a nasty red bar, and that's at the top of the range. It's a big red bar, which suggests testing the bottom of the range before buyers would get very aggressive. Again, repeating, but how far can it bounce today? 224, gapping up into this area there. You can see a little bit of a void. It's right up at resistance. So I think a little caution right at the open is warranted. You can see the resistance right there. Looking at the futures, pretty nice bounce, but pretty severe drop. That looks kind of weird. I don't think those tails are real. Weird how that looks. I don't know, maybe it's an e-signal thing, because you can see here. Anyway, big red bar in the bottom part so far. We'll see how far it gets. And transports, they just really got shellacked. I don't have the 100 MA on there, but that is right there. We'll see how far this gets. Now, all of these big moves, sideways, whether you look at, again, materials, interest rates, all of this is not going to go away in one day. There are plenty of institutions that are, let's sell, let's lighten up, let's see what happens over the next several days. Some significant damage was done. And the Dow. All right. So the Dow was leading as far as deteriorating early. And then you can see the break of all of these pivot lows. It's bearish. It's got room to drop. It's bouncing here at the moment into the middle of that range there, actually exceeded this. So you see the relative strength here versus the S&Ps, because it's got beaten down more. So again, the idea of what's cheap, but and again, a wide range bar after multiple bars move, greater than 100% retracement, was hopeful it would gap down this morning. That would be kind of a gift, but we rarely get those kind of gifts after drops like this, unfortunately. So again, see how far it goes. At least this cleared that. And so as it creates new support, and that's what happened here. This wasn't here Friday, obviously. As this creates new support, like to what Debbie had said, what if it breaks out and comes back in? Well, apply the question to the chart. If it breaks out and it comes back in again, does it actually violate new support? So if the Dow was to break out and come right back down under that pivot low, it's a bearish event. So there are questions applied to a chart provide us answers versus, well, what if this happens? Well, I don't know. If that happens, is it meaningful? Well, if I look at the chart and let's say it doesn't break down under some support, which has lasted for several hours, well, then, could be just a wiggle. NASDAQ futures. This could go down, it could go up. If it goes up, obviously, I think there's going to be sellers there. So one thing to keep an eye here as far as the broader markets go, let's assume that the S&Ps and the Dow, maybe the Russell, it'll catch up to go higher. And this will move less than they do. And if it comes up here, and this could be the tell as to things coming back down, or what if this doesn't go up there and they reach their resistance levels and it's only at this pivot high and it shows relative weakness? That could be, information that suggests where they will stall. So, again, I think today is going to be kind of a, which way do they go here? How far do they go? And we'll see as new information is provided, we get a clearer view. I mean, long term, I'm thinking this, just based on charts like this and other sectors, whatever it bounces here in the short term, unless it makes some kind of miracle recovery and got back here, the beginning of this week or this whole week could just be some consolidation of the prior drop. And if it doesn't get very far, it's going lower. I mean, all of those, what occurred suggests it's going lower. We always have two scenarios as to some kind of wild move that happens, and all of a sudden this just rallies all the way back up into here. And it's like, okay, regroup. You want me to look at those? XME. Yeah, so along the theme of this economic slowdown, or it's just not going to be as good as we thought. While this has gold in it, it's got copper, it's got other metals, steel. So if you look at STX, got Seagate Technology, I got beat up. SLX, I think it is, steel. I mean, this is like going up, 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 things are going to be great. All of a sudden, there's a shift in sentiment and steel breaks down. Other metals break down. Copper breaks down. And not everybody, many, if you're in the construction business or buying a 2x4, complaining about wood coming down. So we've got all of this information that's saying things are going to slow down or not going to be as good as was anticipated. How bad does it get? Well, we need to see more information. What happened last week, right? We talked about this months ago. Keep an eye on this. It spiked up. The 5-year spiked up while the 30-year, I was going to use the word crash. It's not really a crash, but it's a momentum move to the downside where you had short-term rates going up, long-term rates coming down, and they're nowhere near meeting. So, comments in the letter over the weekend, well, while this is short-term bearish, it's certainly nowhere near a concern of, what occurred just before the Corona mini crash, where the yield curve was right on the edge of inverting. The warning signs were there. So these are, hey, heads up, there's, risk here. Odds are it isn't over yet. So, look for what's showing relative strength, what's showing relative weakness. Probably the beginning of this week, what showed relative weakness is probably better for short-term trades, and what showed strength probably, just hangs out, doesn't do as much. The dollar and oil, all right? Oil's been holding up. It came down a bit, but as far as metals go, the dollar ripped higher and gold got killed. Right? So there's that inverse relationship. So there's lots of moving parts going on here to keep an eye on. You can only deal with so much, especially from an intraday trading point of view. So we'll see what today brings, and especially after the first half hour, I think we'll have a little bit better idea. What yours, Dan?
Good morning, everyone. So yeah, I was looking at the diamonds myself. That has a nice bounce. And this, as you know, there's now multiple expirations on the Qs, as there are the spiders, Monday, Wednesday, Friday. And I wish there was on the diamonds, because this looks like the best day trade long, gapping over this base, holding pre-market, big price void. And also, um, I'd do a zero DTE trade under Friday's low. Would be a beautiful setup. So let's see. Craig talked about transports, of course. We have a half lot short of transports. We have a full lot short CSX, and we did on spiders on the afternoon breakdown. We bought a bear put debit spread, had a nice open gain into the close. And, I said we could gap either way because it was the end of the quad witching, and, but we're chart readers, and that was a nasty crack, nasty daily, so on and so forth. And I, I surely wanted the camp of multiple fluid day sell off for another 3, 4, 5 days would then give us a reversal, get those internals booked, and then that would be the time just to have a beautiful put selling party and swing trade party for the bounce back, getting that oscillator McClellan under 300. That's been a very good symbol, or signal rather. Sam, your drop down. Sam's asking about a couple things here. I wish. Gapping up, but sloppy, maybe 30-minute high. BB, no pattern. It's a bull sandwich, which is a bearish pattern under the lows. But maybe, I don't know. It's just not on it's not on my hit list for being ripe. SIX, there's no pattern, Sam. It's reverse on support, but look at all these overlapping bars. There's no price void. Now I know it had a favorable mention in Barron's, and so I wrote it down also, but there's no pattern. Let's see, YouTube, couple here, XPEV, Neo, XPEV. You gotta ask me what you're thinking, folks. We don't. You're getting on board a moving train that's far from the 20, up 3 bars, a gap down. I have no idea what you want to do with that. But there's no, this Wednesday's MT Live, we're going to be talking about what quality means. What is a quality pattern? And that's what we're going to talk about. And that one, there was no pattern in the first place, more or less a quality one. Neo here, it's not a 1, 2, 3 because of Friday's bar was well in excess of Thursday's. Retesting on the 15-minute. I don't know. I don't know what you're thinking again, but I'm going to be chilling here at the market open. Best case, I don't know. I don't know what you're thinking. Over pre-market high a scalp, but there's no great price void. I wouldn't short it. Remember, I'm trying to, we're all after quality stuff and then timed with the futures. Look at Citibank got clocked the last 2 weeks. Once that, if we get a bullish turn, I'll keep an eye on that for a put spread. Although, as we've been saying in the green room, we're fighting, a number of bearish weeklies and monthlies. So any swing trade we get with monthly and weeklies that look like this are just going to be short-term trades. CAT similar. That's holding. They tried to stabilize on Friday. So this one might be interesting for a 30-minute high day trade because that's been beat up so much. I'm going to put that in the window on my other computer. Let's see the NS. I just had an alarm going off. Yeah, this is a 1, 2, 3. So this is quality. See, it's a bottoming pattern, it's rising 200. The 20 MA curled. I had a closing breakout on Thursday. I got a price void. So this is a quality 1, 2, 3. Yeah, as I mentioned that the on SIX positive mention, but there's no pattern as of now. Disney, no pattern FT. Well, I actually take that back. I retract that. It's actually it's a continuation breakdown with a price void. Sell setup weekly. Relative weakness here to the diamonds rallying pre-market. So yeah, I take that back. This is a day trade short watch. Yeah, so that one's not bad at all. Particularly on Mondays, I don't trade in the first 10 minutes. Just there's more ruckus going back and forth at the open with the weekend orders and so forth. Bitcoin getting smacked here again, down 10%. So the Bitcoin stocks, look at BITW, poor thing. Look at these currencies. That's a nasty breakdown right here. Or Bitcoin cult, they're not having a good time. DPZ, NVIDIA, up on YouTube asking. DPZ, yeah, it's a pseudo 1, 2, 3 and a strong uptrend. So I'll put that on the list. Bullish weekly, monthly. I'm not buying anything right now, but that one's worthy of putting on the list. Yes. NVIDIA, there's no pattern. It's strong. We actually shorted a 0DT call spread on that thing on Friday. Lou, BTNB, never heard of that. It's not bad daily. It's bullish consolidation. I don't like the way it trades on the 15-minute, but if you like it for fundamental reasons or whatever, you can buy over this red bar. You can buy over 1037, looks good. Torch, ATAI. Recent IPO, bullish 15, maybe 15-minute high or work. Too extended for me. Look at a big old gap. But look at Zip, another recent IPO. I just saw this one going by the gap's too big now, darn it. I just saw this one going by the ticker. This is ZipRecruiter. I knew they were talking about going public, and I didn't know they did, but I have to cancel that now. I gave it as a 30-minute long pre-market as a core long, but man, the gap's too big right now. So canceling that. Just so you all know, whoever's a paid member of the weekly options trader, we changed the code over the weekend, so you have to go in the members area and just click through a little Telegram thing icon. But yeah, the Zip would have been nice to get on Friday. Joe, W, a void, W, with a void, you're talking about something else, sorry. Look at Q's, because hey, this is we talked about a possibility of getting smacked at the open. Carlos, stops Friday's high. We're just in, kind of hope mode right now. I'm in it too. Boom, boom. I mean, there's